It's almost 11 a.m. in Hong Kong, 1 p.m. here in Sydney. Welcome to Bloomberg Markets Asia. I'm Paul Allen. Here are the top stories. The euro currency and bonds fall as far-right parties win big in European parliamentary elections. Macron calls for snap elections in France. Narendra Modi sworn in as India's Prime Minister for the third straight time, but his diminished mandate has investors reassessing the Modi premium. And Singapore's biggest banks are tightening scrutiny of their wealthy customers after getting caught up in last year's money laundering scandal. All right, interesting weekend in Europe. We've got a few markets closed around the region today, but let's see what's going on. Avril Hong in Singapore joins us. Avril.
Yeah, Paul, we have a number of markets closed, but it's a big week in terms of events that could kind of prompt volatility in the markets. Think about how we are waiting for the US CPI, the Fed, the BOJ. We are waiting as well for those interest rate projections from the US Central Bank. So lots to keep an eye on. For the moment, remember it was against the backdrop of that US jobs report, solid numbers coming in, the Treasury selling off, the yield on the 10-year still sitting above the 4.44 level. We are also seeing Japan bonds coming under pressure today because don't forget, there is that expectation that the central bank could start cutting those bond purchases, and at its meeting this time, also prime the markets for a rate hike next month. So this is what we're seeing. By the way, it's not just the 2s and 10s they're selling off. It is across the curve, further out into the 30 years as well. But these higher yields are actually helping some of the financial-related stocks. That's why you see the rebound in the Nikkei today. And we're also seeing the cheap Japanese currency continuing to support some of the export-related counters. And the EM Asia FX also on the back foot amid a stronger dollar. Something else we're keeping an eye on, those India stock futures. Narendra Modi has been sworn in, and after the week that was, we are bracing for a bit more stability to come into Indian assets. Let's flip the board, because in terms of political uncertainty, of course, we were watching out for how German and French voters really delivered a heavy blow to their leaders. President Emmanuel Macron now calling for that snap election. The euro is on the back foot, weakest level in a month against some of these other trading peers, and we are seeing the likes of Credit Agricole also saying that the euro is at risk. Some of the key levels we're watching on euro dollar 107. Paul.
All right, thanks very much, Avril. Far-right parties have made significant gains in European parliamentary elections, dealing blows to the governments in France and Germany. Bloomberg's Stephen Carroll has more from Brussels.
Parties were expected to do well in these European elections, but their performance delivered a number of bombshells. In France, Emmanuel Macron has called snap legislative elections for the end of this month after his party came a distant second behind the far-right party of Marine Le Pen. In Germany, Chancellor Olaf Scholz's party had their worst score ever in a European Parliament election, facing off at the far-right AfD. There was better news for other European leaders. Italy's Giorgia Meloni's party performed well, increasing their score and confirming her control of power in that country. More broadly, the centrist alliance of parties that brought Ursula von der Leyen to the European Commission presidency 5 years ago did return with a majority capable of re-electing her to that position. She says she'll be reaching out to her partners in the coming days to build that alliance. The European leaders who will put her forward as a candidacy for president of the European Commission will meet to discuss that in a week from now. In Brussels, Stephen Carroll, Bloomberg News.
Let's bring in our FX and rate strategist David Finnerty now. So, David, what's the outlook for the euro after not just these election results, but also now the calling of a snap election in France?
Yeah, I think near term, obviously, the pressures, no surprises, on the euro. Markets don't like political uncertainty, and with President Macron calling that snap vote, the risks are obviously that Marine Le Pen's National Party could win a strong mandate that she basically has to be, Macron has to basically appoint her as Prime Minister. If you do that, it's going to be very hard to pass reforms on the same agenda in France. So that political uncertainty is not good. But having said that, realistically, the biggest near-term risk is towards the Fed and that Fed dot plot, whether it be 1 or 2 rate cuts. At the moment, the market's pricing about 33, 34 basis points of Fed rate cuts. So if the Fed signals 2 rate cuts, then obviously we know markets historically will run through any rate opening door they can, and therefore you would see US yields push lower, the yield taking a dollar with it, vice versa. If the Fed dot plot signals 1 rate cut, that's going to be very hawkish, and that will take the dollar higher. So today, I think the risks are euro weaker, but in terms of where the euro goes by the end of this week, it's really based on the Fed dot plot.
Yeah, and I mean, these are European elections. Can we anticipate any potential changes to policy there that might impact the euro as well, and just beyond the central bank rate divergence story?
I think in terms of the worries in France is going to be the biggest risk, because obviously the election being called, so passing policies there is going to be a lot tougher to get agreed between President Macron and whoever is going to be the new Prime Minister, particularly if it's from another party. In the other states, obviously they've got a warning, a shot across the bow, shall we say, that immigration's going to become a big thing. That's what certainly these votes are calling. But you have to remember also that the centre-right parties, which is most candidates, they still were the main winners. So it's really what happened is, really, if you look at it, it was the far right won at the expense of the Green parties. So really, the Green policies may be tweaked. Immigration certainly become a big thing moving forward. But again, in the near term, and without any elections, the individual policies can change quickly in terms of what the voters is key for them at that moment in time. At the moment, they're certainly saying immigration is something that is obviously a big concern to them.
Yeah, well, there are a lot of macro factors on the docket for this week as well. And if we just take a look at some of the central bank decisions that we have coming up on our wall, well, of course, we have the Bank of Japan towards the end of the week. But the big one, the Federal Reserve coming up as well on Wednesday. Taiwan also going to be making a decision as well. But let's just talk about Japan for a minute. We did see the economy there narrow its contraction in the first quarter, according to that revised GDP data. Do you think that's going to have any impact on the BOJ's thinking here?
I don't think it will have a major impact on it. I mean, going forward, the market's expecting them to tweak their bond buying program. And the key thing I think to remember is that it's what is expected compared to what happens. So if they don't tweak the bond buying program, the markets go, well, we'll have to factor that in. And certainly the market is already factoring rate cuts this year, about 8-9 basis points priced in for July, with about a quarter basis points, 25 basis points factored in by the end of the year. So that is already priced into the equation. If the BOJ doesn't give them that, the market gets very disappointed and will obviously sell the yen. Vice versa, if the BOJ is extra hawkish and signals even more than that 25 basis points this year, then obviously that could be yen supportive. Having said that, again, what the Fed really does in that dot plot, you're going to see a very big swing on that. So you've got two competing factors there, with the Fed being really the dominant of the two, but certainly the BOJ's decision will have an impact.
All right, FX and rate strategist David Finnerty there. Let's bring in Ashvin Murthy now, founder and CIO at AVM Capital. And Ashvin, I just want to pick up on some of the points David was making there. We do get a new set of dots at this meeting. We're not expecting any change in policy at this meeting. But what do you expect in terms of the dots, in terms of signalling the path forward for potential easing?
I think given what we saw with the unemployment report on Friday, it would make sense to move down to 1 dot. But Powell's managed to keep these dots a lot higher than they should be. So even in March, we kept them at 3 dots just by 1 vote. So there's a potential for him to keep it at 2 dots, but I think the relevance of the dots has gone down a lot, because it's obvious that, they're just guessing where things are going to land. They've gone from 1 to 3 and now going back to 2 or 1. So I think the markets will pay less attention to the dots, given there's only 6 more months till the end of the year.
Well, is there an even greater downside risk to consider here as well? Because just a few months ago, we were talking about 5 or 6 rate cuts from the Fed. Now we're down to probably 1. Do you think there's a chance here we're not going to get any at all in 2024 if this data keeps on coming in strong and the Fed is, as it says, data dependent?
Yeah, that's our base case. We think it's either 0 or 1. Given, you have stock markets at all-time highs, you have data which is strong but is getting weaker. So, what we had was the excess over the COVID period is starting to wear off. So you're starting, even the job vacancies versus unemployed, that's come down to pre-COVID levels, 2019, which was a very healthy job market. So I think it will take some time before that deteriorates to a point where the Fed needs to cut. What's keeping them on hold is inflation. And, I think they'd like to cut, but the longer inflation stays at this 3% annualized number, it just makes their life difficult because there's no way to justify cutting due to growth or the labor market. So I think highly likely, given the recent set of data, we're going to have either 0 or 1 cut.
To what degree does the Fed being on hold make life a little bit easier for the BOJ when it considers its path in the opposite direction towards tightening?
I think the BOJ is now focusing on 2 areas. One is the interest rate hikes, and the other is reducing their bond buying because they would like the yield curve to steepen. I think, there was no mention of letting the yield curve steepen initially, but with dollar yen at 157 now, it's become obvious that the markets don't really pay attention to BOJ hikes when they think about dollar yen. What's more important is reducing the liquidity out there, and the only way they can do that is to reduce the bond buying. So I think this is something that's going to happen regardless of what's happening in the economy, because if they don't, I think dollar yen is probably, with the US economy still pretty strong, dollar yen will just continue to march higher. So reducing this bond buying will happen, I think, over the next 6 months or even longer. But they won't let it go completely out. They won't let go completely. I think the BOJ likes to control things. They've learned from the experiences with the US, with SVB, with the UK, when we had the long end yields selling off 2%. I think they don't want to see the similar thing in Japan. So it will happen, but it'll happen gradually.
Yeah, you're not alone in that view. We are anticipating a reduction in bond buying, if not at this meeting, certainly signalling the path forward. But even as you were speaking there, we just saw the yen sink through the 157 levels. So it doesn't appear to be priced in, this idea that a reduction in bond buying is going to prop up the yen. What is going to be supportive to the yen? Do you think we might see more intervention, or is tightening the only thing that's going to do it now?
Right now, dollar yen is sort of following 2-year yields in the US quite closely with a positive drift. So while 2-year yields have been range trading over the last, I'd say, 9 to 10 months, dollar yen has been following closely on the short term, but then continues to drift higher. And to get rid of that positive drift, they really need to reduce liquidity in the system. You can't have the Bank of Japan, increasing liquidity while the rest of the world is reducing liquidity and expect dollar yen to come down. So, this is something that needs to be addressed. I think the markets understand it. Raising rates by 10 bips or 20 bips is not going to make a difference.
Do you find that a number of central banks around the world seem to be losing patience when it comes to waiting for the Fed? When the RBI held on Friday, it was saying that it's questioning this follow the Fed policy. We've already seen the ECB move, but in terms of the ECB, when you look at that decision, do you think maybe it's got the makings of a potential policy mistake?
I think the ECB kind of talked themselves into that cut. So, it wasn't data dependent, that's for sure. But after this cut, if you look at what's priced in the markets, there's a little bit of policy convergence. The number of cuts in the UK, US, and Europe, all about 33 to 35 bips till the year end. So I think the markets are anticipating that, the bigger central banks are going to follow the Fed's lead. That's one thing that's supporting the rest of the world is we've seen growth data starting to inflect higher after a terrible 2023. Whereas in the US, things were great in 2023, but they're slowing down a little bit. So, there's no rush for Europe or the UK to cut rates right now because things are getting better.
Well, Ashvin, I appreciate your patience talking all about the central banks because we have had a lot of central bank action both in the past week and upcoming. But I want to get your views on markets as well, particularly China. It is closed today, but of course, animal spirits, consumer sentiment, so closely linked to what's happening in the property sector. Have the announcements you've heard so far in terms of propping that up been enough for you? And is the real question here around implementation?
I think the policies in the right direction, there's a lot of unfinished projects in China. Some say it's about 3.6 million square meters. Maybe you need about 3.6 to 4 trillion RMB to complete these projects. So, spending 1/5 of that over a long time frame is a step in the right direction, but it seems quite small. And the next thing is it's a pretty complex situation, taking over the development and then finishing it and then using that for low-cost housing, because you're within the same building, you're going to get people who are paid up for those apartments and the others who are just getting it through low-cost housing. So all these things need to be sorted out. I think the soundbite sounded very positive, but markets have suddenly realized that maybe it's not going to be as easy as it seems. And that's why we've seen markets sell off quite a bit. I think property stocks are down 20% from the highs.
Your valuations are certainly looking appealing in China. Are you adding to positions there?
So we looked at that. We actually got out at the end of April because we were positioned for a mean reversion of very low valuations once the government came into support stocks. However, once it came to the median valuations of what we've seen over the last 5 years, we thought that was better to put risk elsewhere because we weren't very bullish on the recovery in China. We think this property sector fallout is going to be with us for 3, 4, 5 years, and it's going to take a lot of time to bring back consumer and investor sentiment.
All right, Ashwin Murthy, founder and CIO at AVM Capital. Thanks so much for joining us. Still to come this hour on Bloomberg Markets Asia, HSBC's chief India economist is going to share her analysis on the RBI's 8th consecutive hold, and we're going to hear why she's expecting looser monetary policy down the line. This is Bloomberg. Welcome back. Indian Prime Minister Narendra Modi, there he is, getting sworn in for his 3rd straight term. This is after suffering a bruising electoral setback. It's forced him to share power for the first time. Modi's swearing-in ceremony was held at the president's residence in New Delhi before some 8,000 guests, included in the crowd business tycoons Mukesh Ambani and Gautam Adani, as well as leaders from Bangladesh, Sri Lanka and the Maldives. All right, for more on the political situation in India and what it means for markets, let's bring in our South Asia economy editor, Ruchi Bhatia, in New Delhi. So, Ruchi, we do have Narendra Modi there in a coalition. It's unfamiliar territory for him. To what degree does this make the reform agenda and his economic development plans a little less certain?
It will certainly make it difficult because, as you yourself said, that this is unfamiliar territory for Prime Minister Narendra Modi, which means that he will have to work extra hard with the coalition partners to push through some of the critical reforms. Having said that, we did see just yesterday one of the coalition partners, the NCP, was already miffed because they did not get a cabinet position. They were offered only a Minister of State position, which is a position lower than the cabinet minister. They were not very happy with it. Having said that, it will be very hard for the Prime Minister to now balance his coalition partners. Just yesterday, we did see Narendra Modi picking up some of his, old BJP, colleagues as cabinet ministers. He's picked up a lot of experience, people who've been there with him in the last 5 to 7 years and have been able to push through some of the critical reforms. And which is why, if you see leaders like Amit Shah, Rajnath Singh, Nirmala Sitharaman, Nitin Gadkari, Subramaniam Jaishankar, they all have made a comeback in the new cabinet. However, one of course needs to wait and watch out for what the new cabinet and ministerial portfolios will really look like. But having said that, in terms of reforms, Modi will have to make sure that there is more consensus that now needs to emerge for him to be able to push through some of the critical reforms. He also has to make sure that the government does not slip on the fiscal consolidation path, which rating agencies, mind you, especially S&P, that has put India on a watch for an upgrade, will be watching out for.
Yeah, well, in terms of the fiscal situation, the finance minister's got to deliver a budget in July, which raises 2 questions. We don't have a finance minister yet, and what will be in the budget, and how difficult is it going to be to make sure that budget is not inflationary?
Hopefully, we should be getting a finance minister sometime later today. A whole host of names are doing the rounds, including the name of Nirmala Sitharaman, who was the finance minister in the last 5 years, and that will bring in some sort of policy continuity. And among other names that are doing the rounds at the moment is that of Amit Shah, who was the home minister, which will mean that the prime minister wants somebody really strong and solid. He also has an understanding of the Indian markets, so it's his name that's doing the rounds, and also the name of Piyush Goyal, who was the trade minister, and he has also led finance ministry temporarily for a brief period in 2019. So let's really wait and watch out for who will be the finance minister. But you're right when you're saying that there are a lot of challenges, because the finance minister will have to present a budget in July, and will have to make sure that the budget is not inflationary. The budget focuses on some of the key areas that the government is talking about. For example, focus on welfare for the poor, for women, ensure that there is enough job creation, make sure that you open the door to getting more investments into the country. So the task is really cut out for the new finance minister.
Yeah, well, we saw markets go on a bit of a wild ride last week as exit polls were proven to be somewhat wrong, and then seemed to come to terms later with the outcome. But for market watchers, for investors, is there really much to worry about here? Because coalitions in India aren't that unusual, and the economy and markets have typically done all right under them.
I mean, in that sense, you're right that there is not that big a need to really worry, because we have seen in India maximum number of reforms that happen in the country. Case in point being the 1991 liberalization reforms happened under a coalition government. Having said that, the situation was very different at that point of time, but the coalition government did come together to make sure that some of the tough reforms really happened. So one really cannot, write down a coalition just yet. It does look like, and from the initial conversations that I've had with various government officials, that they're going to be working extra hard to make sure that India's growth trajectory remains on an uptrend. 6.5% to 7.5% is something that various economists are already pegging for India for the next decade or so. It really needs to be seen whether they can really punch above their weight and make sure that we get to an 8% level.
All right, our South Asia economy editor Ruchi Bhatia there in New Delhi. Plenty more to come. This is Bloomberg. All right, let's just take a look at some of the market action in Japan, particularly the bond space. We've got JGBs falling at the moment. 10-year real yields, I beg your pardon, have risen, they're heading for a 12-week high, actually. Real yields up about 11 basis points since the start of the year. So Japan joining this global bond sell-off that we saw after those EU election results, the calling of a snap election in France as well. So we've seen bonds worldwide slipping. And of course, we're looking ahead to a Bank of Japan meeting at the end of the week. Still to come, a deep dive into the FX space as traders in Asia brace for more volatility ahead. We'll discuss the top market risks next. This is Bloomberg.
A really strong report.
Stronger than what people were expecting going in.
This jobs report is not recessionary. It is soft landing.
It does close the door on a July rate cut.
I think the Fed would still like to get a cut or two done.
There's no way they can cut or signal a cut in July with this data.
I still think September you target as doing that.
The reason we think the Fed is going to be able to cut in September and December is because we think that inflation is going to proceed with moderation.
At least as it pertains to equities, I think the Fed pushing out when they're cutting is good news.
There are no spare tires in this economy. So if you get it wrong, and you weaken too quickly, it's going to be a very difficult mistake to correct.
Bloomberg TV guests there reacting to the strong US jobs report. So let's check in on how markets are faring with Avril Hong in Singapore. Avril, what are you watching?
Yeah, Paul, against the backdrop of that strong U.S. jobs report, we saw how Treasuries really sold off, and the 10-year is now above the 4.44 level in the U.S. So a lot of headwinds coming into today's session in the Asia-Pacific, but it's interesting to see how the Japanese stocks are not faring that badly, and this is as investors brace for the BOJ, which this week could go on to announce their reduction of bond purchases and prime the markets for that rate hike. Japanese bonds themselves are coming under pressure. So higher yields helping the financial-related stocks, the cheap Japanese currency helping some of the export-related counters in the country as well. And that is despite today showing from the GDP print that smaller contraction than previously thought. Keep in mind how Bloomberg economists still see really slack demand in Japan. Something to keep in mind. Let's flip the board because, of course, we've been keeping an eye out on the political uncertainty. And this is after the elections in Europe, that German and French voters, dealing the heavy blow to leaders in the country. The French president calling for the snap election. Lots of risks for the euro amid this rise in far-right sentiment we're seeing against the pound, against the dollar. Weakest level for the euro in about a month. That's among the things that we're keeping an eye on. But flip the board because as we've just been touching on, it's really about that U.S. jobs report, that reaction in the markets today. The dollar is extending gains. These are the EM Asia currencies that have been losing a lot of ground. The losses being led by the Korean won for now. Paul.
All right, thanks very much, Avril. Let's get some more on the market's outlook this week with our MLive strategist, Mary Nicola in Singapore. So, Mary, Asian FX, it's likely to see some volatility to kick off the week.
Yeah, and we're seeing it already, but it's likely that we're going to see this volatility permeate and stay consistent throughout this week. We've got so many different headwinds coming through. We've got U.S. CPI, we've got the Fed as well, and then, of course, we round up the week with the BOJ. But really, the most important thing for FX markets will be what happens with the Fed. And, of course, this time around, we're getting the dot plots, and it will show, and the likelihood is that we could see a move from 3 cuts down to 2 cuts. And recall that the market is already pricing between 1 to 2 cuts, which, of course, if they look at 2 cuts, they might get a little bit excited, but it's really in line with the narrative that we've been hearing from the Fed so far about being a little bit more patient and a little bit more cautious. And, of course, what we've gotten from the non-farm payroll data is that the Fed is going to have to proceed with caution with average hourly earnings still on the high side. But the fact that they might move to 2 cuts just sort of solidifies the narrative, but also gives them a hedge if things get slower faster.
Yeah, the Fed definitely a major catalyst for the FX space, but we saw some violent moves for the euro after those EU parliamentary election results. What are the implications of that, of a weaker euro for EM FX volatility?
Yeah, I think the real key thing here for with what happened with the euro is more so on the snap elections. I think that's the key focal point for markets for France. Of course, it's the second largest economy in the eurozone, and now they're looking for snap elections because overall the centrists did okay. It was more about the far right gaining more ground in these European parliamentary elections, which has caused French President Emmanuel Macron to call these snap elections. And of course, the fear is, what if they do gain, in fact, more traction in France, and what happens for Europe more broadly? And that's really the implication here that the market is trying to struggle with. And of course, we know that the implication of the euro, a weaker euro, just has repercussions across all different markets, especially not only in EM, but of course across into the Scandinavian currencies and even the Aussie. So the ripple effects are quite large if we continue to see a downward drift in the euro. So that's something to keep an eye out for, just how much these political implications reverberate and continue.
Well, we've just seen the yen weaken through 157 as well in the past few minutes. We've got, of course, a BOJ meeting on Friday. We're expecting to see or hear some news about bond purchases being trimmed. To what degree might that put a floor under the yen?
Yeah, it's going to have to be accompanied as well with what is the outlook for rate hikes as well. So Bloomberg Economics and the market is shifting more towards a hike coming in July. But they're going to have to be a lot more aggressive, especially if we see the Fed coming through and looking for higher for longer and reiterating that mantra. So for the BOJ to really have an impact on the yen, we're going to have to see something a bit more aggressive, which is very unlikely because we've seen comments from BOJ officials that shows that there's still contention within the BOJ members of some are leaning more on a hawkish stance and some are leaning more on the dovish stance. So there's still no consensus within the BOJ of where to head. So a combination of the reduction in the balance sheet plus of an indication of a hike will be one of the key things that markets will look out for that will have broader implications about the yen. But at the end of the day, it's really the Fed here that's in charge.
All right, MLive strategist Mary Nicola there. Still to come, HSBC says India's central bank could see mounting pressure to ease policy. Their chief India economist joins us next. This is Bloomberg. Welcome back to Bloomberg Markets Asia. You're watching the India Focus. And here's a look at Indian markets just ahead of the open. It was, of course, a pretty exciting week last week. And looks like we're skewed a little bit to the upsides for today's trade. We're out opening in about 6.5 minutes. Just seem to be set up for some fairly modest gains. The Sensex there, futures higher by about 1/3%. So investors bullish on Indian equities have cited the promise of policy reforms and economic growth under Narendra Modi to justify its premium over EM peers. Today's Taking Stock takes a closer look at that so-called Modi premium. Our senior reporter for Asia Equities, Abhishek Vishnoi, joins us now. So Abhishek, what are investors making of Indians' premium valuations now after that election result?
Well, most are expecting a little bit of a course correction. It's a larger family now. It's harder to manage a large family, right? So that is seeping in. But if you look from the point of view of time horizons, for the short term, yes, a little bit of uncertainty. For the medium term, maybe some swings. But for the long-term thesis, nothing has changed. So, they are demanding proof in the short run for establishing that India's story with reforms under Modi continues. So there is a little bit of premium that may go away. But as you can see in the markets, a net sum of all kinds of liquidity has taken the markets higher. Elections look to be in the rearview mirror because Nifty egged out an all-time high, recouping all kind of losses, entire losses that it had seen because of the stunning election result.
So how has the India investment playbook changed now?
A tinge bit defensive. Cross-asset investors are preferring bonds ahead of India's inclusion in some of the key bond indexes. And for equity itself, there is a tinge bit of defensiveness creeping in. People are bullish on consumer, given the mandate. People are bullish about, let's say, something like consumer staples, affordable housing, affordable insurance, and so on and so forth. So that is becoming a key theme. There's a little bit of moderation in valuations expected for themes like capex and infrastructure-related stocks. And most investors are sort of in a wait-and-see mode, before committing big money. They want to check how reforms are panning out, and I think budget would be the next big test for this market. It is set up in July. If it becomes too populist, then it may not be a great thing. But if Modi can balance populism, with reforms, and that's the base case, then it's all hunky-dory for India again.
All right, Bloomberg's Abhishek Vishnoi there. Let's bring in Pranjal Bandari now, Chief India Economist at HSBC. Pranjal, I just want to pick up on the points that Abhishek was making there. We do have a budget coming up in July. What we don't have is a finance minister. We're hoping to perhaps hear some news on that this afternoon. But what concessions do you expect might need to be made here in terms of policy, the pace of reform, the direction of reform, when Narendra Modi is accommodating the desires of a couple of coalition partners?
Hi, great to be here. I think there's going to be a lot of continuity, more than the markets at this point are pricing in. My sense is that a lot of the reforms that Mr. Modi has been championing over the last couple of years should see no threat from coalition partners. Things like public capex, everybody likes new roads and new highways. Things like more SOPs to futuristic sectors like semiconductors, EVs, green hydrogen, a look towards macro stability, bringing down the fiscal deficit gradually, ensuring inflation comes down to 4% target. I think these have been some of the key reforms of Mr. Modi. And I really don't think there's a big case that these will be derailed in any way. In fact, I would say that in the past, coalition governments have actually been able to look at a wider range of reforms over time, rather than just a few reforms of one particular party. And maybe we get a better economic outcome from a coalition government. The probably one area where some changes could creep in is welfare spending. Perhaps we could see slightly higher welfare spending, but I don't think it's going to come at the cost of fiscal profligacy. I think it will be well contained within the fiscal consolidation path. And the government is actually lucky there. It's been getting a lot of RBI dividends. Tax buoyancy has been strong, revenues are very high, and my sense is, it'll use some of that to increase welfare spending, which was, by the way, cut drastically over the last 12 months.
Yes, and when it comes to the budget, whoever the finance minister is going to have to thread that same needle that a lot of governments around the world have been trying to thread. How do you balance supporting cost of living increases, those welfare payments that you mentioned, against ensuring your budget isn't inflationary?
Well, yes, it's never easy, but I think the government is lucky this time around because it's got two sources of revenues, which is doing very well for it. One is higher RBI dividend. Now, the RBI is making a lot of money in a lot of the assets it holds, and it gave a large bounty to the government this year. And my sense is some of that is going to continue over the medium term. And the second is tax buoyancy. Now, because of a lot of reforms which have improved the tax information network in India, tax revenues have really gone up sharply. We've been seeing tax buoyancy of about 2 to 3, which is very, very high for the last couple of years. And my sense is that some of that will continue. And this gives a lot of degrees of freedom to the government because it can keep up the accelerator on the capex front to some extent, and also, put in some extra money for welfare spending. When I say extra money for welfare spending, I sort of have a number of 0.2 to 0.3% of GDP. Nothing too large, nothing too unsustainable, just a little bit more than it was in the last year.
We're going to be getting some important data points out of India in a couple of days as well. CPI, also industrial production. Industrial production seen slipping to 4.6% on year. So what sort of issue does this create, not just for the government, but also for the RBI? What's more important here, keeping inflation low or stoking growth?
I think a bit of both, but of course, inflation targeting is the formal mandate, and they will prioritize that. My sense is that as soon as RBI gets the confidence that its 1 year ahead inflation forecast is coming down to the 4% target, I think it will be open to easing, basically to cutting rates. And my sense is that a lot of that depends on the monsoon rains. Now, they begin in June, but by the end of July or beginning August, we get a good sense of how the monsoon is progressing, how the sowing patterns have been. And if that is a source of comfort, then my sense is that in August or perhaps in October, the RBI will be looking to easing a little bit. But of course, a lot of it depends on the monsoon rains at this point of time.
Yeah, it's an interesting situation, isn't it, where the weather might dictate the future course of monetary policy. But in that respect, Friday's RBI meeting was kind of interesting as well, because we had 2 of 3 outside committee members dissenting, voting for a cut. Is the momentum within the bank now shifting towards easing?
Well, it's an important area to watch. My sense is that 3 things need to align for the RBI to actually start cutting rates. One, as I mentioned, the monsoon rains should pan out well. Second, the budget, if the fiscal targets are adhered to in the budget, then I think that gives more space for monetary easing. And third, the RBI is relooking at its neutral real rates. It's an academic concept, but it really tells the RBI whether there is space to cut or not. And they probably come out with this report in the next month or so. And if that shows space to cut and all of these 3 factors align, then my sense is that we could see a rate cut, between the August and October meeting.
I noticed one factor you didn't mention there was whatever the Fed does. And we heard some mention from the governor that the RBI is questioning this follow the Fed policy. Do you think that what the Fed does is of less and less importance to India now?
Well, I'm glad you brought that up. For the first time, Governor Das actually said that, do we really need to follow the Fed? And he actually went on to say that those market participants in India who are not seeing this carefully might miss the bus. And my sense is that, that sort of gives a sense that if domestic factors allow, then the RBI would be open to actually cutting before the Fed. So I'm glad you brought this up. I think this is a very interesting space. It's the first time the RBI governor has said this so explicitly.
All right, Pranjal Bhandari, Chief India Economist at HSBC, thanks so much for joining us. So let's take a look at how Indian markets are tracking. We did open while we were having that conversation, but up and running for just over 3 minutes now. And we're headed to the upsides after what was a very volatile week last week. The Sensex better by 0.4%. Bit of a mixed bag around the Asia Pacific today. A number of markets closed, of course, as well. But Indian markets firmly in positive territory. Narendra Modi was sworn in over the weekend. We now eagerly await the naming of his cabinet, in particular the finance minister, and there's a chance we could learn more about that this afternoon. All right, plenty more to come. This is Bloomberg. All right, let's get to Singapore. Several banks caught up in the country's biggest money laundering scandal are ramping up scrutiny of rich clients. Bloomberg reporter Avril Hong has been following this story. So, Avril, what do we know about what the banks are doing to close loopholes exploited by criminals?
Yeah, Paul, I mean, this is a case that's raised a lot of eyebrows and questions about how exactly these criminals were able to exploit loopholes. Basically, it was a syndicate that, transferred those illegal proceeds, laundered that money from online gambling, and it was seen as the largest money laundering scandal to hit the city-state in recent years. About 3 billion Sing dollars of assets were involved. So amid all these questions being raised, there's enhanced scrutiny on whether it's Singapore or foreign banks operating in the city-state and how exactly they screen their clients. So we're hearing from the likes of Citigroup and DBS. They're reportedly stepping up checks as well as training for some of their private bankers. For Citi, according to some of the training material that's been seen by Bloomberg, this includes helping them to spot some of the tricks that criminals use to hide their backgrounds or where the funds are actually coming from. Some of the red flags that have been raised as examples include if these potential clients come from Fujian or Guangdong, which is where these criminals were mostly from, and then they don't speak English, but they have golden passports from Turkey, from Vanuatu. Those are some of the red flags that these private bankers have been told to kind of keep an eye on. We also hear from the likes of DBS and how they are stepping up the vetting processes for major transactions. So this is what we're hearing about what the banks are doing of late.
Well, how about what the regulator's doing, conducting a review of the banks involved? What's going to happen once that's finished?
Yeah, so the MAS, the Singapore regulator, it has been conducting on-site inspections. They've been going to these banks, kind of interviewing the staff members, trying to find out what the weaknesses in compliance checks are, and it has completed those inspections. So what we're waiting out for is the conclusion of the review, and once that comes through, it's expected that the banks that are seen to have the closest and the biggest dealings with these criminals and the transactions are expected to face some fines. We're watching out to see the extent of the potential financial penalties involved. Don't forget, for some of these banks, it wasn't just that they were, taking on the deposits from these criminals. It was also how they were loaning to the locally kind of affiliated companies of these criminals. They were also facilitating the property transactions. So there are a lot of questions being raised as to whether enough was being done. And we also hear about the likes of Citigroup and Credit Suisse. These are seen as the banks that had held the most assets that were directly involved in this case. So those are among the lenders that we're keeping an eye on as well, Paul.
So in terms of the criminal case, what's the latest there?
Yeah, there are 10 men that have been embroiled in this. They've all pleaded guilty. The last of them will be sentenced today, and we have another 17 that are still being investigated. They're still at large, but the sentencing today, I think, is seen as a way to pave the way forward for the next steps in the case, because don't forget, there are assets at stake here, and there are some concerns about how they will be dealt with. Billions of dollars in assets in the city-state. And we've seen how some of the banks, such as OCBC, recently, it's been a bit trickier for them to offload these properties, given the luxury property downturn in Singapore. For example, if you take a look at the recent auction attempts, the latest one that actually didn't draw any bidders. So that's what we're watching for now. Paul.
All right, Bloomberg's Avril Hong there in Singapore. Let's take a quick look at markets before we leave you, in particular European futures. There's a whole lot of red on that screen. We did, of course, have those EU elections over the weekend. Far-right parties doing very well. French President Emmanuel Macron calling a snap election. So it could be an interesting session in Europe. And that is it from Bloomberg Markets Asia. Horizons Middle East and Africa coming up next.